Hello, everybody, and welcome to problem 4-6, retained earnings statement, prior period adjustment. So let's go ahead and take a look at this one. So prepare a corrected retained earnings statement. Acadian Corporation normally sells investments of the type mentioned above. FIFO inventory was used to compute net income. So state whether the items that do not appear in the correct earnings statement should be shown. Okay, so let's go ahead and start out with here with beginning. So my beginning retained earnings is 257,600. Now what we'll typically do here is that if we have prior period adjustments, we'll want to kind of see where those are. So here, this is what's kind of bizarre, is that a gain on sale of investments, that's going to be on the income statement. Net income, that's fine, but obviously we're going to have to adjust that if they're breaking this out separately. Refund on litigation with the government, that would probably be an other income or other income. Recognition of income earned in 2019, but omitted from the income statement in that year net of tax. Now that is a prior period adjustment. So basically plus or minus adjustments, income. So here, this is going to be 25,400. So that is, in fact, a prior period adjustment, and it's also being shown net of tax. Let's get down here. Loss on discontinued operations, that's going to be impacting net income. Write-off of goodwill, that's also going to be impacting net income. That should not be shown separately on the statement of retained earnings. A cumulative effect on income in prior years changing from LIFO to FIFO. This will be an adjustment. So this cumulative effect from LIFO to FIFO. And because this is a deduction, I'm going to show this as a negative 23,200. And then we have over here dividends declared, that's fine. So we're going to have here my beginning retained earnings as adjusted will be 257,600 plus the recognition of the income plus the cumulative change of the effect of that accounting principle shift. Okay. So over here, this is my beginning retained earnings as adjusted. Then I have to add in my net income. So the issue here with the net income, though, is that we started, so I've got here, my net income was 84,500. But this gain on sale of investments, this should be included in net income and not listed out separately. So this is a gain on sale of investments. Then over here, I have refund on litigation, 21,600. Okay, and then for my deductions, the discontinued operations will be shown as it's part of the income statement. It's my loss on discontinued operations. And then I have write-off of goodwill. Okay, so my new net income. So my net income as adjusted, right? What I'm going to be showing here is not going to be this 84.5, rather it's going to be 52,300 because those items shown below do not belong out there separately. They belong on the income statement. So less my dividends declared for the year, 32,000. So my ending retained earnings is going to be my beginning as adjusted plus the net income minus the dividends, or 280,100. So in terms of, so this is what it should look like. As far as each of these items, the gain on sale of investment, that's going to be an other revenue or expense. refund on litigation with the government, other revenue or expense. This is a true prior period adjustment. Loss on discontinued operations, that is going to be shown below income from continuing operations on the income statement net of tax, write-off of goodwill, other income or expense, and there you go. So that is problem 4-6. I hope you enjoyed it as much as I did, because I really enjoyed it. I will see you on the next video. Have a great one, and I will see you soon. Take care.